Okay, welcome back to Accounting 101, Chapter 7, version 1.2 or 7.2, whatever I called it. I apologize when I had to stop the first video, did what I had to do, come back, and the computer told me that I lost my internet connection. So we'll begin from we'll start from the beginning of exercise 7-21, doing the back reconciliation for Hardy Photography. Under the information there, they show us the check register, I guess, for checkbook, which is a cash account. It shows the checks, the deposits made during November. Underneath, they have the bank statement, a very rudimentary one here. So I looked down at the end of the checkbook and got the balance that's in the checkbook, $1,245 at the end of November 30th. And the bank statement says $302. Okay, so we got a little bit of a difference there. Let's see if we can reconcile it. So first thing I'm going to do, I'm looking at the checkbook. I see there was a deposit made on November 9th for $135. And I look under the bank statement and I see that they have that listed there. But the deposit on November 30th, the end of the month, is not on the bank statement. It is in the checkbook. So I asked myself the two questions. Which party is not aware of this information? Or which party is aware? Obviously, the company, Hardy Photography, is aware because they have it in the checkbook. They posted it in their checkbook that they made a deposit of $1,235. So the adjustment has to be on the bank side because the bank is not aware. Okay, so this is a deposit in transit. The company put it into the night depository in the bank. I don't know what date November 30th is. We don't even know what year it is. But let's assume it's a weekend, so the bank's not going to be aware of it until Monday morning. So we're going to add that to the bank balance. So we're going to say deposit in transit. $1,035. I put it as an addition because a deposit will increase our balance. Next thing I want to look at is there anything on the bank statement that would increase the account that the company is not aware of? So I look at deposits. There's only one deposit. So that's the only thing that would increase it as far as the bank is aware of. So then I'm looking at the outstanding checks on the bank statement. I see 6/22, 23, 24, 25 makes it easier. They run in sequence there. If I look at the checkbook, I can see that the company wrote checks 6/22, 6/23, 6/24, 6/25, which are on the bank statement. They also check 6/26 and 6/27, which are not on the bank statement. So the company wrote the checks. The company is aware of it. The bank is not aware of it because those checks haven't cleared. So the adjustment has to be on the bank side of the reconciliation. And what does the check do? It reduces the amount of cash. So on the bank side, under the bottom part where it says less, over here, I'm going to subtract out the checks that were written but have not yet cleared. Outstanding checks, we call them. Less outstanding checks. And I'll put number 627. Or I'm sorry, 626. And that was for $110. And check number 627 for $290. I'll put them right there. 110, the check number and the amount, check number and the amount, and their outstanding checks. And I'm looking up and down there. I don't see anything else that the bank would not be aware of. Okay. So now I can do my math. $300, $400. So the first thing I'm going to do is I'm going to combine the total of the outstanding checks, put it over here. There's only one item up here. So I'm going to add, get a subtotal, then I'm going to subtract out the outstanding checks. It's going to be $1,537 up the top, less the $400 on the bottom would be $1,037. And I'm going to label that and call it what it is. Adjusted balance per bank. On November 30th, 2024. Okay. All I did is add the deposit in transit to what the bank ending bank balance was and subtract out the outstanding checks and get a number and call it what it is. Adjusted balance per bank at November 30th, 2024. Now let's work on the book side. I don't see anything on the bank statement that would be an increase to the balance in the checkbook. So we can leave that top blank. But I'm looking there at the bank statement, and I see there's an asterisk on a check 624. It says $105. I look up above, I see check 624. They put $45. That was to the utility. So I got to scroll down here a little bit. And let's see, what's that asterisk telling me? The correct amount of the check is what the bank says, $105. Okay. So we wrote the check and treated it as it was $45 when in fact it was $105. So the difference there, 105 minus 45, is a $60 difference. Now, what is that $60 difference? Well, a check for $105 was treated by the bank or treated by the company as it was a $45 check. So they have to subtract $60 for the error on that check. So let's call it what it is. Error on check number 624. We have to subtract an additional $60. Okay, we wrote a check for $105. The bank honored it as a $105 check because that's what it was. In our records, we took it as a $45 check. So we need to take out the difference, the $60 additional difference away from our balance. It says there that we got printed checks. So the fee for checks, let's call it. And it is $23. So the bank is taking that out of our account. It's other charge. And then they say there's a service charge of $25. I don't know what they did for us. Maybe they have a notary public and they notarize something for us. I don't know. It doesn't tell us what it is. Service charge, $25. So the bank took it out of our account as doing something for us, and we have to adjust for that. Oh, wait, I think I made a mistake over here. Yeah. It's not 1037, it's 1137. I'm looking over here. I just glanced at it. I had $1,537. I subtract 400. That should be 1137. 1,137. Let me have a bad habit of writing with pencil, so I'll just scribble it out and do it the right amount. I would have saw that when I did the book side of things that I had a different number and I'd have to go back to the drawing board. All right, so we're just going to do a subtotal here. Bring that balance per books down just so it looks nice. Up here, just bring it down. We didn't have any adjustments to increase it on the book side. And now draw a line, and we have, try and be careful with my math this time, the $60 additional deduction for the error on check 624. Add that, the fee for the checks, and add the service charge. I get $108 deductions made by the bank that the company's not aware of until they get the bank statement. So there it is there, the error on the check, the fee for the checks, the service charge, total of 108. Subtract that from the 1245. Let's see, cross my fingers. 1245. And I get 1137. And I'm kind of happy because that's what I got as the adjusted balance for the bank. Okay, just take the total of the deductions, the adjustments we have to make on the company side. There's the beginning balance less the adjustments, 1137. It agrees with 1137. If they don't agree, you haven't reconciled. Take the difference and look for a transaction involving that amount. All right, now. Part 2, they want us to do the entries based on those adjustments. So they have a question here. How much cash does Hardy actually have on November 30th? And that would be the adjusted balance. I always ask the sucker question in my face-to-face classes, which amount is right, the balance per the bank or the balance per the book? And the answer is neither, because each of them has to be adjusted for various items. Okay, so the amount that they actually have is the adjusted balance per books or the adjusted balance per bank, and those two must be the same, otherwise you have not reconciled the bank statement. So now we have to do the entries. So the first thing we have to do is the correct for that error on check 624. So all these entries will be dated November 30th, and we will increase our utilities expense by $60 because we recorded that check as 45 when it should have been 105. And we're going to reduce our cash by $60 because we treated that check as it was a $45 check when in fact it was a $105 check. Okay. To correct error on check number 624. Here's what the journal entry would look like. Increasing the expense that check was for, the utilities, and lowering cash because the check was for 105 and we recorded it as if it was 45. We made a mistake. Then we want to record the fee for the checks. Okay. Just call it bank expense. And credit to cash for $23. And then say to record payment for printed checks. You could call it fee for checks ordered or whatever, something that explains what it is. Okay. And next one would be, again, bank expense. And cash. And we have no explanation. So other than what they said, it was some type of service charge. Okay. Service charge deducted by bank. All right. Okay. Next one is another bank reconciliation. But in this case, instead of giving us the bank statement and the checkbook or cash account, they give us all the information in paragraph form. No problem, we can handle that because we know the two rules. Ask ourselves which party, the bank or the books, is not aware of it. The adjustment have to be on the other side. And does the adjustment increase or decrease the balance? So I'm just going to head this up. Exercise, I should have put on the other one so you would know. Exercise 7-22. And as I have, again, the blank form, and I'm going to put the information in as I read it. Jim Root Corporation operates 4 bowling alleys. The business just received the October 31, 2024 bank statement from City National Bank. And the statement shows an ending balance of $910. Okay, so that's going to be the balance for the bank, $910. All I'm doing is taking the information they're giving me and putting it where it belongs. Balance per bank, $910. Listed on the statement are an EFT rent collection of $440. Be careful with these electronic funds transfers. They go both directions. They can be a collection by the bank, meaning somebody we do business with sent a payment directly to our bank, the bank put it in our account, or we can send a payment to somebody we deal with, then it's going out. It'd be like writing a check. So it's either making a payment or receiving a payment. And we're, is it coming in or going out? An EFT rent collection of $440. So the business is not aware of that until they see the bank statement. So that's going to be an adjustment on the book side. So we're going to say add EFT rent collection. $440. Right here. I don't know what the balance is. I didn't get there yet. When I find that piece of, I'll throw a service charge of $7. Okay, so again, the bank would have deducted that $7 service charge from the account. They're aware of it, so their side is good as far as that transaction is concerned. We're not aware of it until we get the bank statement. So we're going to make the adjustment on the book side, the company side. And what would the service charge do? Well, the bank deducted $7, so we would put it under the subtraction, the less amount. So we're going to say service charge. $7 right there on the book side. NSF check totaling $50. Checks totaling $50. Okay, what is an NSF check? Not sufficient funds. We got a payment from a customer. We dealt with that customer, and we got a check. We treat it. We take it in good faith that it's a good check. Well, we deposit it into our bank. Our bank sends it to the bank it was drafted on, the corresponding bank, and that bank lets our bank know that, hey, those people didn't have enough money to cover that check. They were overdrawn in their account, so the check bounced. So what's the effect of that? We counted the check as good. It's in our balance. It turns out the check bounced. It is not good. So we shouldn't have added it into our balance, but we did. So now we have to subtract it out. So call it what it is, NSF check, not sufficient funds check, received from a customer. Add back the amount of $50. A $23 charge for printed checks. Okay, so fee for checks. $23. So the bank deducted it from our account. We're not aware of it. So the adjustment is on our side. So here we have the service charge, the check that bounced, not sufficient funds check, and the service charge of $23. Let's see, what else do we have here? In reviewing the cash records, the business identified outstanding checks totaling $440 and a deposit in transit of 18. All right, let's take these one at a time. Outstanding checks. Who's aware of them? The company is, because the company wrote the checks. They're outstanding because they have not cleared the bank. The bank's not aware of them. What would checks do? Checks decrease the balance. So put it over on the left-hand side, balance per bank, and put it under the less amount, less outstanding checks. And they told us it was $440. And a deposit in transit of 18. Well, we made the deposits, so we, the company, are aware of it. It's in our cash account. The bank's not aware of it, and a deposit will increase. So we're going to make the adjustment on the bank side up the top under the addition and call it what it is, deposit in transit. $1,800. Let's see. During October, the business recorded a $260 check by debiting salaries expense and crediting cash for $26. Uh-oh. So they made a mistake. They wrote a check for $260 and they treated it like it was $426. They dropped the zero. So the difference there minus 26 would be $234, right? So we debited salaries expense for $26, credited cash for $26. We should have done it for $260. So we have to adjust that by subtracting the additional $234, which is the difference between the $260 that it actually was and the $26 that we treated it as what it was. So, well, that's real good English. Correction of error. Correct error. We don't have a check number here. No. Correct error. I guess we could find it if we had more information. It was just error on paycheck. Take out an additional $234. Okay, last thing they tell me is the business's cash account shows an October 31 balance of $2,140. So I'll write that in up the top here, balance per books. I don't know if I showed you we had to subtract an extra $234 for the error on the paycheck. And then we put the balance up here. The last piece of information they give us, the balance per books at the end of October, $2,144. Now all we have to do is add and subtract the respective columns. Okay, so we have 910 plus the 1,800 in deposit and transit gives us a subtotal of 2,710. We just take out the outstanding checks of $440. It gives us a balance of $2,270. Call that what it is. Adjusted balance per bank. And now do the math over on the book side. $2,144 plus the $440 rent collected via EFT gives us a subtotal of $2,584. And now add up all our negative adjustments. So plus 50 plus 23 plus 234 314. So 314 negative plus 2584. 2270. Hey, I got the same number, so I'm happy. Call that what it is. Adjusted balance for books. Okay. So there is that. We started with the balance per the books, made our adjustments, get to the adjusted balance there. Got our balance per the bank cash account, and added in the rent collected via the electronic funds transfer. Then we have our negative adjustments, correction of the error on that paycheck, not sufficient funds check, printed checks, service charge. Subtract those, total them up, subtract them, get $2,270 on both sides. So we've reconciled it. Once you get those two amounts together, all we have to do now is the journal entries for based on that. Exercise 7-22. October 31 is our date. So first thing we're going to do is pick up that EFT of the rent collected by the bank on our behalf for $440. All right, we're getting cash. It's in our account. We weren't aware of it until we saw the bank statement. So we got to record the increase in cash by a debit and the increase to the revenue account rental revenue. Next thing, we want to correct that error on that paycheck. So we're going to increase salaries expense because they told us salaries expense was debited for $26 and cash was credited for $26. So we're going to have to use the same accounts, the same ones being salary expense being debited and cash being credited. And we have to make sure that the right amount, the account reflects the right amount. So the difference between the actual check, $260, and the amount we used, $26, was $234. So the expense goes up $234 and the cash goes down $234. And then we have the NSF check. Well, when the check came in, we would have debited cash for $50 and credit that customer's account receivable for $50. Well, the check was no good. So in fact, they did not pay us. They sent us a check that was no good. Well, so let's reverse that entry. So we're going to reestablish the fact that they still owe us $50 by debiting the asset account, accounts receivable, and reducing cash. Because when it came in, we did a debit to cash and a credit to accounts receivable. All we're doing is reversing that entry that we made when we got the check because we thought the check was good. The check turned out to be no good. So you got to reinstate the fact that they still owe us $50 and that we have $50 less in our cash account. Next thing is for the checks. So let's use the bank expense account. Banking expense, $23. You can notate it that it was for the printed checks if you want. But all it does is increase an expense and decrease cash by $23. And finally, the $7 service charge, again, debit bank expense and credit cash for $7. I didn't put explanations in here, but you could. This one would have been to record the bank service charge. The previous one would have been to record the check, the fee for the printed checks. The one above it would have been to record the NSF check, and the two prior would have been to record error on the payroll check, and then finally to record the EFT collection of rent. Okay, and that does. Yes, I don't know why that happened to me the other day with my other video. I was doing it. You know, I'm going around here talking, and I look up and it's telling me I'm offline, lost my connection. So I apologize for the technical difficulties. If you got any questions, drop me an email.